This video is not financial advice, only a source of good information.
And the good information that we're going to be talking about today, we're going to talk about the best stocks in 2021 by sectors. This is going to be a series. We're going to start with the financial sector, and we're going to talk about put and call credit spreads, how to make you some money. And since I'm showing you how to make some money, help a brother out. Like, share, and subscribe. And let's get into the video. You're going to enjoy this one. All right, starting out, I need to read a couple things to you. The financial sector is a section of the economy made up of firms and institutions that provide financial services to commercial and retail customers. This sector comprises a broad range of industries, including banks, investment companies, insurance companies, and real estate firms. Now, after reading that, I feel like Eddie Murphy in Trading Places. I don't know about you, but anyway, here's what these banks do. They set the financial policy, so you're only getting 0.05% APY on your savings accounts. They do this knowing that the annual inflation rate is 1.2%. Right there, they're stealing money from you. You are losing money, okay? But not just any bank set those policies. The Federal Reserve Bank set those policies. And it's actually 12 different branches that are placed strategically throughout the country. These are things that you need to know. Okay? I'm just flipping through it just so you can get a good picture of it. I want you to know that because the world is not as it seems. This is much different. There are some other things that we need to talk about. The guy who set up the actual Federal Reserve is John Pierpont Morgan. And listen to this. The Federal Reserve was created in 1913 to restore confidence in the banking system, regulate and supervise the banking system, and act as the lender of last resort to avert banking panics. John Pierpont Morgan. Remember that name because it's going to come back up later in the video. Now, normally when you think about banks, you think of a few that you know. Wells Fargo, ticker symbol WFC. And then you think about another one that's probably a little bit more common than Wells Fargo. Bank of America. Yeah, you think about Bank of America, ticker symbol BAC. This is another one that you think about. Although these are big banks, but they tend to service more retail customers. There are other banks that service different individuals and do different things, such as JP Morgan Chase, ticker symbol JPM. Do you remember that name? I hope you do, because this bank is part of the Federal Reserve. They were actually around on Jekyll Island, John Pierpont Morgan, when the Federal Reserve came into existence. So these are things that you need to know. This information is out there. Now, there's another banking system that kind of threatens the normal commercial banking system, and that is the cryptocurrency banking system. Riot Blockchain, Tari, Monero, Genesis Global Trading, Changely. Did I say that right? Changely? Yeah, I think that's about right. Anyway, out of these, there are only a few that are traded publicly that you can actually invest in. Riot Blockchain is one. And then there's one more that I'll show you later. But when you're looking into these companies to invest in, one thing that you have to do is your due diligence. You have to look at who's on the actual board. You have to look at the CEOs, the CFOs. You need to know all this before you take your money and invest. Because if you put your money in the bank, you're not making any money. They're actually stealing money from you. So turn around and invest and make money off of them. Play the system the way that it was meant to be played. The system was not set up for you to take your money and put it in the bank. That's just not the way it works. Anyway, let's look at another type of cryptocurrency mining company, which is Marathon. Another crypto, it's actually a mining system for cryptocurrency. They actually mine the cryptocurrency, but I refer to it as a banking system. Okay, Marathon, or the ticker symbol MARA. You'll come to know that a little bit later. If you're not investing in stocks, one day you will get to know who MARA is. Currently, the stock price is sitting at $22.39. Great investments for those who know how to do what I'm getting ready to show you. Now, we're going to start off with the normal, one of the bigger banks by asset class in the country is actually JP Morgan Chase. So they're the big dog, okay? Ticker symbol, as I showed you earlier, JPM. And we're going to go over some put spreads, put credit spreads, and call credit spreads. I'm going to show you how to do both. So what you do is, after you hit the trade button, you actually want to pick a date. January 22nd is the one I picked out. And now we're going to start with the call credit spread. The call credit spread is actually a bearish strategy. So you would think normally that it's bullish, but no, this is bearish, because what you're saying is, I don't think the price is going to go above this certain price here that I pick out. So strike prices on the left, premiums on the right, okay? So I started with the 141, all right? Hit sell, and then I hit buy to 143. So what I did is I increased the distance between the strike prices. Now, when you do that, you're going to put up a little bit more in collateral. But you see the premium at the end of the week, and this is a short week, it's going to be $49. So I'm okay with that once I've done all the technicals. Not the fundamentals, but the technicals, and we'll touch on that a little bit later. So once you put in your limit price, 0.49, you swipe up. And this is on the Robinhood platform. See, the collateral is $200. But some of that $200 is actually what they gave you in premium. So we've got it queued. And if we waited, it would actually go into effect right before open, right before market open. But we're going to hit cancel because we don't actually want that. Now what I'm going to do is I'm going to show you now a bullish strategy. Okay? This is going to be called a put credit spread. For those of you that don't know, hit trade, pick the date, and then you're going to start at the bottom. Strike prices on the left, premium is going to be on the right. Sell put, make sure those buttons are clicked at the top. And right now I am looking at, let's go with the 137. I think the 137 would be good. But in order for me to get more premium, I'm going to have to increase the distance between the strike prices. So I'm going to go 137 and 135. Normally, if the week was not shortened, I wouldn't do that. Okay? But this is a short week. I need more in premiums. So we're going to increase the distance. $53 for 4 days. I'm okay with that. Hit 1. Yep. Update the limit price. Swipe up. And it's actually queued. It will go into effect on Monday morning. Well, actually Tuesday if I wanted to do that. But I never do that. This is a rookie mistake. Never, ever actually have an order queued up and just let it go into it. I like to wait until about 10 o'clock before I put any orders in. That's just me. Okay, now what I'm doing is I am in the Webull platform. I thoroughly enjoy the Webull platform. because you can set up different candlestick charts. This particular candlestick chart is what's referred to as a Heikin-Ashi candlestick chart. It's different because the Heikin-Ashi candles take the average of the candle that came previously before it. Okay? By doing this, it's easier to spot uptrends and downtrends, as you can see. Also, it's got these little circles on the chart, the E and the D. Those are earnings and dividend, ex-dividend date. So you can know how the security acts when those dates do occur. These are things you need to know. Okay, also it's got the RSI, which is the relative strength index, which I like to look at, and the MACD, which is the moving average convergence divergence. These are things that you need to know when you're doing your technical analysis. Just wanted to give you some game. Now, what did we go over? We went over the financial sector, put credit spreads, call credit spreads. We touched on all of that. And I hope you paid attention. Whoa, what is that? That is the music. It is time to go. And it is time for you to like, share, and subscribe and hit the notification bell. And until then, I will see you on the next video. Like I said, we're going to do this in different sections because there are so many things to talk about. I look forward to seeing you on the next video. Until then, take care. Slow nickel, fast dime.